now, and that's really been something that has exploded in the background. Viewers, erstwhile US Secretary of State Henry Kissinger once delivered a brutally honest line about geopolitics. He said it may be dangerous to be America's enemy, but to be America's friend can be fatal. Today that warning is echoing across the Gulf. Iran, battered by devastating opening strikes that decapitated much of its leadership, has not responded by challenging American naval power or attacking major US bases. Instead, as you can see on your screens, Tehran has chosen a far more strategic target. America's closest Arab partners. Swarm after swarm of low-cost Iranian drones is now striking the glittering city-states of the Gulf. The UAE, Bahrain, and especially Dubai are bearing the brunt of this asymmetric retaliation. Dubai airport has been struck. Viewers, on March 7th, there have been repeat strikes on the Dubai airport. Let's see all those windows, because I'll give you an idea, viewers, of the timeline. So we are looking at many days now. It's been 2 weeks, as you know, into this conflict. So between March 12th, March 7th, today, name it, there have been attacks. Today, the oil tanker was hit in the airport, leading to, again, suspension of airport services. Flights had to be rerouted. And for decades, viewers, the Emirates pursued an extraordinary transformation. Oil wealth was poured into building a post-oil future, aviation, finance, logistics, and tourism. Dubai International Airport handles nearly 90 million passengers a year, making it one of the world's busiest transit hubs. Jebel Ali Port is the largest man-made harbor on the planet and the Middle East logistics nerve center linking Asia, Europe, and Africa. But today, those symbols of modern Dubai are under stress. Drone strikes have sparked fires near landmark developments like the Palm Jumeirah and disrupted operations around Burj Al Arab, the big iconic tower. Flights across the region have been suspended and smoke has been reported near major port facilities. The economic tremors are already visible. Dubai's real estate index has fallen nearly 20%, wiping out this year's gains after property prices surged almost 60% between 2022 and early 2025. So let me give you an overview, viewers, of what's been happening. The Dubai financial market general index fell 4.7% in a single session, sharpest drop since 2022. Dubai equities have slipped into a bear market with the index down 20%. Dubai's real estate index has dropped nearly 20%, wiping out gains made in 2026. Operations at Dubai International Airport were temporarily suspended after the strikes. Regional air traffic volumes fell to about 50% of normal levels as airlines diverted flights. Loading operations were disrupted at the port of Fujairah, one of the world's largest oil bunkering hubs, raising fears of supply interruptions outside the Strait of Hormuz. War risk insurance premiums for tankers transiting the Gulf have spiked up by 50%. Wealthy investors have begun moving funds from Dubai to financial hubs like Singapore, while expats and entrepreneurs have attempted to shift capital out after the strikes. All of this matters because Dubai's entire economic model rests on confidence. The promise that this desert metropolis was an island of stability in a turbulent region. But today that promise is being tested. The very American security umbrella that enabled Dubai to reinvent itself is now pulling it onto the front line of a widening conflict. If this war drags on, Dubai risks discovering the harsh truth behind Kissinger's warning. Sometimes the cost of friendship with a superpower can be catastrophic, which is one of the reasons, viewers, as you know, why India keeps it an arm's length from getting involved in any sort of alliances with America or any other regional grouping. So I want us to explore this, viewers. What does this all mean for Dubai? Bob McNally, former White House energy advisor and president of Rapidan Energy Group, now joins us. Thank you very much. Bob, thank you for speaking with me. I want to begin by asking you questions related first to the Gulf and what we are seeing there? What is the impact on kingdoms like Dubai and others in the UAE of this constant harangue of drones from Iran?
You know, it all depends on how this ends, okay? If this ends with the current regime in Iran still in power, bruised, angry, but also defiant, and having taught its neighbors that it can't be defeated and that it could do this again, that is a very bad outcome for all Gulf Cooperation Council members, all, including Dubai, of course, and UAE. Dubai, Abu Dhabi, in the UAE, Kuwait, other countries. That would be the worst case scenario. However, if this conflict ends with Iran having a new government that is not a threat to its neighbors, the United States, the world, and its own people, I mean, that would lead, I think, to be a fantastic scenario, because then the risk of seeing a repeat of what's happened to Dubai here and other regional countries would go down. All other kind of risks would go down. So much of this depends on how it ends and what type of regime is in Tehran at the end.
So basically what you're saying, correct me if I'm wrong, is that a regime change is the best outcome. And we're seeing some of those statistics, viewers. Would you agree?
Well, whether it's a change in regime entirely or new actors within the current regime, the IRGC and the current regime, folks who could decide to make the deal that the president wanted to make with Iran, which was give up your nuclear weapons capabilities, all the components you need to make a nuclear weapon, and we can have relations, we can ease sanctions, we can do other things. Whether it's an entirely new regime or, as we saw in Venezuela, new leaders among the current kind of cadres, that's either one would be a better scenario, as long as Iran was not building nuclear weapons, was not supporting regional proxies to attack its neighbors, and not threatening the world's oil exports. I mean, whether it's whatever uniform they're wearing or hat or so forth is less important than how they act, behave, and interact with other countries, including the United States.
Okay, so let me ask you, we've seen a flight of capital. We're seeing human resource pull out of Dubai. We're seeing equity crashes, and we were showing those figures just a short while back. Realty gains have been frittered away over the last few months, weeks rather. This is all sentiment driven. All this investment and the markets, etc., all sentiment driven. Do you see this entire sentiment reversing, the state of Dubai or the Kingdom of Dubai recovering if the war were over tomorrow?
Absolutely. Look, Iran has taken the region hostage, and it is inflicting pain and fear throughout its neighborhood. And you just described some of the manifestations of that. But hostage situations don't go on forever. I think what it's going to do is motivate the victims of the hostage taker to deal with the hostage taker. I don't know if that's going to be quickly. I don't know how much more cost there will be. But at the end of this, I am confident that the victims of the hostage taker are going to unite and deal with him. And afterwards, there will be recovery. Absolutely. Very capable folks, very capable markets. They've had decades of strong economic growth, financial development, social opening everywhere, Saudi Arabia. I mean, that progress is not going to be forgotten or stopped forever. It's going to resume. And again, if it's in a world where Iran is no longer a threat to everybody, on an even stronger basis.
A lot depends, therefore, viewers, on how this war ends. And we're going to keep going with Bob McNally in just a few moments. I just want to take some breaking news, viewers. We're being told that US President Donald Trump is going to be addressing the media over the widening West Asia war. So that's the phrase that has been used. There is a lot of consternation in DC because I think what the Trump administration is beginning to realize is that perhaps it went in with some preconceived notions and their best laid plans are not going according to what they thought should have been the logical trajectory. So you've had uncharacteristic pushback from Iran. They weren't expecting the regime to survive after the initial decapitation strike. The Iranian mullahs, ayatollahs, the entire clerical order seems to have held on. And this is making things very, very complicated because it is having a bearing, viewers, on the global economy. The escalating war involving Iran has rapidly become one of the most significant shocks to global financial markets. Equity markets have reacted with heightened volatility. Global indices from the US to Europe and Asia have experienced sell-offs as investors move away from risk assets. Major US indexes such as the Dow, the Sensex is down almost 5.5%. The Dow is down, Nifty is down 6.3%. Dow Jones, S&P 500 have dropped amid concerns about higher energy. Let's look at that. That's a 2% drop there. NASDAQ down 1%. Geopolitical instability while investors, that's the FTSE 100 viewers, that's the British index down 5.2%. Large number, Nikkei, the Japanese index, almost now touching the 10% meltdown. Hang Seng, the Hong Kong index down 4.1%. So it's not looking good globally. And all of this geopolitical instability, investors have shifted towards safe haven assets like government bonds. Energy importing countries are particularly exposed. Asian economies, including India and China, are facing both rising import bills and currency pressure. Analysts warn that if crude prices remain elevated or approach $150 per barrel, it could deepen inflation and drag stock markets lower, especially in emerging markets. Beyond energy, the conflict is disrupting broader supply chains. Shipping routes, fertilizer supplies, industrial commodities linked to Gulf exports are facing uncertainty, raising concerns that the war could reshape trade flows and production costs. Now, viewers, let's speak once again to Bob McNally and get a sense really of what happens. What is the prognosis? What is the impact if the Strait stays shut for more weeks? So thanks for being back, Bob McNally. What really is going to happen? Let's assume if this particular Strait of Hormuz remains closed for another week, what are you anticipating?
Yes, thank you, Rahul. Yes, my team at Rapidan Energy Group did a deep dive tabletop exercise last June. We had some military officers advise us, and we modeled out exactly what we're seeing right now. When we did that, clients thought we were crazy because they didn't imagine that the U.S. would allow anyone to close traffic through Hormuz. But now they're paying more attention to us now. Let's just put it that way. So as this goes on, as we enter the third week and the fourth week, we start to enter the real physical manifestations of this. So far, it's been largely a price phenomenon. Crude oil prices rocketing up above $100 a barrel, refined product prices even rising even faster, margins increasing. But now we're going to start getting into where we start to see physical implications, such as major shutdowns of Gulf producing fields. But that's more on the upstream side. You asked about downstream. So as we go forward, we're going to start to see, particularly in Asia, shortages appear, especially of refined products, not so much crude. Refined products such as LPG, and in India, I think you're well aware of this better than I am. Jet fuel, particularly in Europe, gas oil or diesel, and then even gasoline will probably be last. But we'll start to see where refiners are going to start reducing their throughput, making less refined product, because they can't cover the cost of the crude, and they're not sure they're going to make the margin, and or the crude supplies are gonna run out. So it's starting to get physical now, and we'll start talking about major shutdowns of fields and then product shortages in certain areas around the world.
Well, the Indian government, Bob, has been holding daily briefings, and they've been giving us an update on the situation with regards to refined products like LPG and so on and so forth. And the Indian government says that it can source crude and, of course, a lot of these products, these refined products, from further afield, and therefore India will not really be significantly impacted. What's your assessment of this?
Yes, especially since the United States government decided to ease the sanctions to make it easier for India in particular to access Russian barrels that were sanctioned. So now with a greater ease and comfort, India can do that. However, if you look at the price of Russian oil off the coast of India, it's almost $100 a barrel as well. It's very, very high, record high. So there's no cheap oil, Rahul, in the world right now. There's cheaper, a little bit, and then there's oil that's blocked up in the Middle East that can't get out in the Persian Gulf. So there's no cheap oil, but with the sanctions easing and the other opportunities, India has done a good job at diversifying its sources of imports. It used to be heavily dependent on the Strait of Hormuz. For LPG, it still is. But when it comes to crude oil, I think your dependence is quite lower. If I'm not mistaken, around 30%. Still big, but you have other sources, especially from Russia.
Okay, so crude is above the $100 a barrel mark. What are the possible implications if this goes up further? Let's say to about 120, 130, or even 150. I mean, first of all, can it go up to 150 or 130 even?
Well, I mean, the good news is in the world, we're able to grow GDP. We can have economic growth at higher oil prices. We're becoming more energy efficient. The bad news is that if we can't restore the free flow of what is 20% of the world's energy, in the case of India, a direct source of imports, then the price will keep on rising as high as it needs to rise to reduce demand. And unfortunately, Rahul, that likely means by slowing economic growth. Because if you think about it, oil demand is not discretionary. It's not like going to the movies or, taking a vacation, things that we can delay or do without. Oil is about transportation, and that's about running our economy and our lives. So we can't just stop moving. Therefore, we have to pay these higher prices, and the price will have to go higher to slow demand. Because at the end of the day, India can't grow. I don't think the United States can grow in a world where we can't recover 20%, 1/5 of the energy that we just lost 2 weeks ago.
Well, viewers, what you're seeing are pictures of the Shivalik that docked today. And this is also bringing LPG, and you can see it's written broadly on its sideboard that we're bringing in LPG. This is a massive amount of LPG, 45,000 tons of LPG, which is enough to fuel a large number of cylinders, viewers. But let me come back to Bob. Bob, if this seemingly intractable conflict stays and the Strait of Hormuz remains blocked for another week, maybe 10 days, where will oil prices be at the end of that?
Well, in the next week, I think we will grind higher in crude prices. We'll probably go well into the triple-digit range, towards $110. That will be fairly slow. If we see any more damage, Rahul, if we see the restraint that both sides have shown so far in not attacking critical energy infrastructure, such as the Karg Island terminal, the Ras Tanura terminal, the Abqaiq stabilization plant, if we were to see that or extensive mining of the strait, then oil prices would leap up faster toward the mid $100 range. So it's either a slow and steady march up,